everybody. It'll be quicker this way. Hello, everyone. Thank you for staying on for this final session of the day. Welcome, welcome. Come take a seat. For this session, we're going to try and look forward, ask questions about what this space might look like in 5, in 10 years' time when it comes to Brexit, to AI, and to open banking. What is going to be happening in these areas? This is an interactive panel, so you can use the app, go to our session, put your questions in there, and I'll try and get as many of them answered as possible. We've got a great set of speakers here who are ready to answer the questions. So let me introduce our panel members. First up, on my left-hand side, Laurent Nizri is the founder and CEO of the Paris FinTech Forum. On his left is Dr. Sievers, who is the founder and CEO of Deposit Solutions. Then we have Jonathan Vaux, who recently left Visa and is now a non-executive director at CardGenY, and Rachel Kent, who is a partner and head of financial services regulation at Hogan Lovells. So welcome. So as a political correspondent, you can imagine that Brexit has basically been my bread and butter for the last few years, and who knows how much longer for. Rachel, though, is the person in the know when it comes to Brexit's impact on FinTech. So I thought we'd start there, Rachel. We don't yet know where the UK is going to land when it comes to our future relationship with the EU. But from where we are now, where do you see Brexit, its impact in terms of positives, but also negatives on the FinTech sphere?
Can you hear me? Is that, yeah. I think it's probably worth starting by saying in terms of where we are now, as if that's a thing. And of course, where we are now is not necessarily a huge amount further forward than when we started. I think it's, as a lawyer, I feel the need to say that nothing is off the table, including, of course, no deal. Also, no Brexit, so we know the Labour Party, I think, is due to announce its position on a second referendum or a people's vote tomorrow. Alternatively, we might find that there's been agreement on a version of Theresa May's deal, which of course comes with it, or comes with, rather, the political declaration. Now, that does actually include a paragraph on financial services, so financial services will be in the future deal, but that's about as much as we know about it. So that's the kind of backdrop to where we are now. In terms of challenges, I guess, then, it's obviously a bit difficult to say, but for me, I'd pick 3. The first one, I think, is funding. I mean, all of you must have heard the word funding such a lot during the course of today. I know Claire Calmagene this morning said businesses want to grow. In order to grow, they need new markets. And I think it was Manish from SoftBank who said that one of the key aspects they look at when making investment decisions is, I think it was target addressable market. So when you're faced with something, depending on what kind of Brexit we have, that looks like it might make access to our biggest market more difficult or at the least more costly, then the implications of that for funding, I think, are certainly a concern to me. The second thing probably would be talent. Natalie Sini was telling me this morning that 40% of UK FinTech businesses have founders who are not British. In other words, they've come to the UK to set up their business. That is a fact that makes me extremely happy indeed, and one which I hope continues. But again, depending on which kind of Brexit we have, what impact is it going to have on the ability or indeed inclination of people to come to the UK? And just finally, as a regulatory lawyer, I can't help but point out the potential loss of passporting. That obviously means the possibility of needing 2 licenses when today you needed 1. That's obviously cost and capital inefficient. So I can certainly see plenty of challenges.
Yeah. Yes, opportunities briefly.
Opportunity is a bit harder. I think opportunity potentially, we hear a lot of the idea of right-sizing or resetting regulation. But Andrew Bailey last week said, yes, but for the EU, we wouldn't start here. So sounds like a bit of potential. But he also, of course, drew attention to the importance, increasing importance, of global standards. So even that opportunity, I think, comes with a challenge.
Okay, and just very briefly, Rachel, how difficult, on that last element, the passporting issue, how difficult is it going to be to find a solution that is going to satisfy politicians from across the spectrum, but also the EU side, and that is going to work for not just fintechs, but the tech sphere?
Here's one I prepared earlier. I don't actually have it with me, but there are proposals around which do provide continued mutual access to avoid the need for the double licensing. They come with a degree of regulatory alignment. If you ask how possible it is to see that that might be agreed, that is the city's ask. It is the current position of the UK government, and we've spoken at length to the Treasury, DEXA and the Foreign Office. That remains their position, and they tell us to be ambitious. But of course, the UK is only half of the story. So we've also been to Brussels and met with governments and regulators of the EU27. And I would sum up by saying, economically, they know it makes sense. Technically, they understand that there's a solution. So I think the question is whether the political overlay, whether politically it can be made to work. And nobody has said no yet.
Yes, okay. Tim, Deposit Solutions is German-based. Has Brexit been part of the conversation over there, in your sphere?
Yeah, so it very much has. We have started the company in 2010, so some time ago, and we stayed in Germany for some time, and then when it was time to go into other countries, UK was quite high up on our list, and so we got the timing horribly wrong by moving into the UK a couple of months before the referendum. And then the referendum result came as a bit of a shock, so we pulled our plans for the UK and just sort of revised the strategy, and now are in the process of launching in the UK, but with a strategy working on a sort of hard Brexit assumption. So we'll just treat the UK as one market. So it had a big impact on our business. I mean, we just then went on to sort of do other markets first because we didn't feel there was enough certainty around how things might play out. I think now things have become a little clearer, at least in that, with a hard Brexit assumption, you'll probably have something that you can operate on.
Okay, all right, thank you. Still no questions, everyone. Does anybody have a question? Remember.
How does it work? Sorry.
So go to your app, the Innovate Finance app, find our session, and click through to our session. Then when you get to that, you'll see a space where you can put in your question. And you can still ask about Brexit, but we're going to move on to AI now. Laurent, if we're sitting here hosting a panel talking about AI in 5-10 years' time, what will we be talking about?
You mean in 5-10 years' time in Europe, still with a German, UK people and French guy?
Sitting in the same room.
Happy to be together and not being at war. Okay, let's try to think about that. So perhaps we'll speak about real AI, because for the last few years, only a few companies really use AI. Most of the other one in finance, fintech, banks, whatever, they use automation with a bit of algorithm, which is not AI. So I have white hair. A few of people here too. We speak about that for the last 20 years. So no, because AI is a big buzzword. You need to put that in your pitch if you want to raise money, but it's not always. Most of the time it's not. It's automation, a few algorithms, and of course it's very interesting. Of course it has an important impact, and efficiency of the banks, of the fintechs and so on. Of course it has an impact on employment, but it's not AI. So perhaps in 5 to 10 years we'll begin to speak about real AI, about what we could do with it. And that makes me think that I was in Shanghai yesterday, and they are a bit different than us on that kind of subject. You have a camera everywhere, you have social profile, everything is more and more digital. So perhaps in 5 to 10 years we'll speak, between now and 5 to 10 years, we'll speak a lot about how can we cope in Europe with our culture and our regulation, but also the things we like or don't like to do with this progress with AI. Because just to tell you a small story in 1 minute, when we decided, I was in Shanghai not for work, for holidays. I bring my family there, and one day my kid of 8 listened to me when I was speaking with my wife about something I read on Shanghai with a social profile and the fact that they are taking your crossing the street, and perhaps after in some cities they have POC where you have a social profile, you cannot do anything more because you were crossing the street at the bad way, and they put your face everywhere in the city. I thought that my kid of 8 listens to it and say, I don't go to China. No way. And every time in Shanghai he saw a camera, he do like that. He's 8. But we're in Europe, we don't see the same way. I don't say that Chinese don't do good ways, they have a different culture. But with our culture, what will you do with AI change in the next 10 years? That will be our discussion, I'm sure.
Okay. Jonathan, if we look at both AI and open banking, what do you think are the key barriers to success for companies operating in that area?
So I think the key barriers are fairly consistent, which is most of the large organizations that have scale have built up kind of individual legacy structures where a lot of that data that is necessary to drive things like AI is completely untouchable. So it's sitting in a bunch of different stacks, and therefore it doesn't work. And most large organizations still tend to think in terms of channel. So if you're a bank, it's my branch, my online, my app. And you have this problem which is fundamental, which is as a result of that, they don't really know their customer. So I may have a credit card, a debit card, a joint account with my wife, none of which speak to each other or in any way related. And so I think a lot of the work we're trying to do at CardGenY and is twofold. One is, I think, building that technology that sits above those legacy stacks and drawing out the data or the necessary ingredients, but most importantly, doing it in a way that is actually customer-centric. And I think that, part of the problem with a lot of the things I see on things like AI, which is about, what I would call don't techno for an answer. It's about what you do with that data to improve the customer experience. And so I think where we have seen a lot of success is with fintechs who have actually identified a problem, whether it's people going overseas to spend money with things like Revolut or Monzo, whether it's small business propositions, and fixing for those problems. And so I think the problems you have are, firstly, from a technology standpoint, it's not easy to do things in a way that's very personalizable. And also, they haven't actually thought in a way that is very customer-centric. So I think putting the customer first, actually understanding what outcomes customers want to achieve. And I honestly think that's probably more likely to come from the merchant side. So much of the innovation you're now seeing is things like point-of-sale lending, because merchants in store are so desperate because of the threat of online to get people in that they're doing things like credit products, financial services products. And so I think it'll be interesting to see where that momentum comes to actually leverage the opportunities of using data smartly and doing that. And I'm not convinced that the banks are going to be the first people to really push it forward.
Okay, thank you. We have a question here on AI. We hear a lot that banks need to get to grips with what data allows, but what does that really mean? What is required from banks to enable AI and connectivity? Laurent?
If you speak legal, that's more for you when you say required. But if you speak not legal, when you discuss with banks and data, the problem is more cultural than legal. They are used to think that they can't do anything. I mean, Jonathan, you've seen that plenty of time when you work with Visa. I worked with you in the past on some stuff, and even Visa was used to say, we can't do that. Why? In fact, you can. But they have been trained for years to think that they can't touch anything dealing with the data of the customer. And most of the fintechs, they build their own case on let's use the customer data. Of course, with the consent. Today we have GDPR and so on. But GDPR can be a great asset for banks also. Of course, it's tough. You need to work a lot. It's very good for lawyers and consultants. But at the end of the day, it's quite good. I've been in SF at the beginning of the month, and many people were telling me that I thought it was not good for us to have GDPR. And we had this discussion. They say, no, we are working to have the same kind of regulation because we think it's quite a good framework to, after that, build something for long term.
I also think there's a cultural problem, which is people have thought in terms of A, owning the customer's data, and B, monetizing the data. Actually, if you do APIs smartly, you often don't actually need to share data to achieve the outcome that the customer wants to achieve. So if we take an example, if I want to buy a bottle of wine, you don't need to know my age, you don't need to know my date of birth, you just need to know I'm over 18 and basically go to somebody who can prove and validate that I'm over 18 and go, is Jonathan over 18? And so I think it's become an excuse, and I think it's a real risk that GDPR becomes this real excuse for not innovating, when actually smart usage of APIs, which is effectively a question and an answer, frame the question right, and you don't need to share personal data.
We talk a lot about control and the customer getting the control with open banking, the customer potentially being king, but actually, could there be too much? Could there be, a bombardment for the customer, and they lose control, in fact?
I think you could argue that's already happened with things like passwords and access. So I think, but what we've seen is generally then someone has come over the top in a platform and solved for that. So you've got things like, on my laptop now, people are solving for my, multiplicity of passwords. So I think that there does need to be consolidation, and I think it's genuinely a risk. It absolutely is a risk. But I think the people who will succeed will start creating that ease of connectivity and almost separating things that are really important, where I want a great degree of control, and things which are day-to-day transactions. So if I'm buying the same shopping powder I buy every week, how much authentication and control do I really want on that transaction? If I'm buying, a £5,000 ticket item from an Apple store, then I probably want someone to intervene on my behalf. So I think making it those transactions smarter will be a big factor as well.
Okay. And Tim, to think about the customer and the take-up of open banking, let's try and look to the future, so 5-10 years' time. From where we are now, how much pickup do you think there's going to be? Or is it a bit of a buzzword at the moment? And maybe in 5-10 years' time, it won't be this thing that lots of people say. Is it potentially hype?
Yeah, I think it's interesting to look outside of the UK for that, because with this debate around PSD2, which is sort of taken for open banking, there is a lot of speculation about how much people really want it and is it going to be big. But if you sort of broaden, the sort of open banking does not just comprise PSD2, it also comprises open architecture. So this sort of principle that you open up for third-party products and service your customers needs better this way under the existing relationship. You can see that this is already happening at scale in a number of other countries. And I think one example is deposits, which is where we are active in. Obviously, the name suggests that deposit solutions connecting savers and banks through their existing point of sale. And people want that because they get more choice and more convenience, right? So it's like obviously good. And you have it as, this has become industry standard in all product categories this has been introduced to. So if you look at mutual funds, for instance, people don't open an account at Fidelity in order to buy a Fidelity fund. They are used to doing that through their existing home, bank or financial point of sale of choice. And the same is in Germany, for instance, the case for mortgage loans too, or is becoming increasingly the case also for deposits. So I think the proof that the customer wants this has already been achieved.
Go on, Laurent.
If I may add something, in 5 to 10 years, I think the problem is not only open banking. Banking data is only a part of your life. So for whatever reason, regulator began by this one, but we are speaking of open data. Why in the hell should only the bank, and FinTech, by the way, open their book and share how much you spent yesterday? Why we don't ask to the telco operator, which are, by the way, much more oligopolistic, to share the data about me, and that anyone can access to any data? Or why we can't ask to the distributor, to Walmart? They know that I bought yesterday things for my kids, which is much more important than to know that yesterday I spent €30 in that shop, because I don't know what was that €30 about. But if I know it was to buy flowers or if it was to buy a toy, I could have much more information on the life of people. So I think in the coming years, and you have already a lot of lobbying on that on Brussels, you will have a lot of discussion about all the data of the ecosystem that can add value to the banking data. Because banking data, transaction data, without what you bought or what you did with it, is a bit useless, if I may.
Do you want to come back on that?
No, I mean, I think Laurent is right. This is obviously something that isn't specific to the financial service industry. I just think for the financial service industry in particular, this is interesting because you have a few things coming together. One is regulation and technology are effectively abolishing switching costs. So even without providers like us who help with the transaction settlement, it becomes easier for customers to switch banks. And then at the same time, customers are getting more knowledgeable. So they are more likely to know whether their home bank is trying to sell them a good or a bad product. Whereas 30 years ago, maybe that was much harder to tell, right? So, and those two things together, I think, make for this really, I think it's really an inevitability almost, because if you look at the existing owners of customer relationships, the high street banks or whoever, even without bank licenses, that the alternative to opening up is likely not that you will keep the margin on your existing products, but it's that you will lose the customers. Right? So there are competitive dynamics at work, I think, which are going to be very hard to hold back for much longer.
Okay.
Much longer.
We don't have that long left, but I do want to ask you to make some predictions, which luckily we don't do in politics anymore because we just can't predict anything. But I'm going to ask you not to predict or look into the next 5-10 years, but we've been asking in this session what next for 5 to 10 years. What next in terms of this time next year? What will we be sitting on this platform talking about this time next year? Rachel, let's start with you. Brexit, maybe?
No, but it is a B word, but it's not that one. I would say bridges. I think if there is good to be found over what's happened, it's a bit in the area of you don't realise what you've got until you're in danger of losing it. And I very much hope that what has happened and whatever does happen, that those of us who care about open markets and regulatory harmonisation and not fragmentation see that whether it's a bridge with the EU or a bridge with any of the new developing markets or the US and so on, that's what we focus our efforts on now.
Okay, thank you. Jonathan?
I think as some of that regulation starts to take hold, there's probably going to be some negatives as well as some positives. I think this whole balance of globalization versus local regulation is going to start creating some challenges. I think the regulators have been taking on some of the digital giants. So I think as people have kind of embedded and done what was a compliance thing, I think some of the ramifications of that are probably going to be a stronger topic of discussion this time next year.
Okay. Tim?
Yeah, I think in a year from now you will have more proof points on traction on open banking applications in the market, and that'll be interesting to follow, I think. And the other thing I'm sure is going to be Brexit. But someone else is the expert on that.
And just before we come to Laurent, we've had a question from Paul Sullivan, which I think is for you. What level of regulation impacts your business today, and how will this change in the future? Does this concern you, or is it just a natural evolution of FinTech?
Yeah, no, I think for us, regulation is an important driver for our business because, as I said, it's one of the macro trends at work. So regulation and policymakers are pushing banks to open up and help customers get a better deal and a better user experience. So, I mean, PSD2 is one example of that. We are in a highly regulated entity because our customers, as an open architecture for deposits, our customers are banks, so obviously we have to comply to their standards. That's for a startup. I mean, we're a little bigger now, but it's still a challenge, obviously, but it's always been like that, so I don't see that there's much changing on that end, except that it's easier to comply with when you sort of have been around for a little longer. But I think on the whole, this is a good thing. But and just sort of one last point, maybe. One shouldn't make the mistake, I think, to just sort of stop at regulation, because really what's driving this whole thing is I believe the sort of customer preferences underlying this, because with the ability to have to switch more easily and transparency about different products, people want this, and I think that's sort of the underlying trend really driving open banking.
Okay, thank you, Tim. And Laurent, gaze into the future for us.
I think to rebound on what you said, it will be after a year of election in Europe, and B word for you will be the new European order for finance and digital finance in general, because being with you or without you, definitely without will be a big change. for everything, but also, of course, for finance. You are today the biggest financial center in Europe. How can that will change a lot of things for us too. And with European election also, because of course you have your own issue here, but we do have European mainland issues too. So I think next year at the same time we'll speak a lot about this impact on the change.
Okay, thank you very much. Well, I hope that we will be sitting here with a Frenchman, a German, Welsh people as well, all in the same room. Thank you so much for all being here. Thank you for your questions. Thank you to Rachel, Jonathan, Tim, and Laurent. And have a great evening. Thanks a lot.
Thank you.